As Putin's aggression in Ukraine has continued to escalate, the U.S. and its allies have responded in a unified voice to condemn Russia and apply economic pressure. Chairman Powell, could you discuss the difficulty of predicting what the implications will be of locking Russia out of SWIFT?
So again, on sanctions, we're not the right folks to ask. We don't design them. We don't implement them. So it would be really a question for the administration.
Let me word it this way. How sweeping do you foresee the ripple effects through the U.S. financial system? Is there an effect on us as those actions take place?
With big actions like this, there may well be unintended and unexpected effects, and hard to say what those might be. In the economic sphere, you're seeing, not directly to your question, but we're seeing concerns over palladium and neon and corn and wheat, shortages of those potentially, but. So it would be difficult to say exactly what the effects could be over time. The United States, our financial institutions and our economy do not have large interactions with the Russian economy. It's a relatively small thing, and it's gotten smaller and smaller in recent years. So there wouldn't be direct effects from these kind of things on the U.S. economy. It's hard to think what the second order effects might be.
Thank you. You've answered my question. As Congresswoman Wagner touched on, the price of oil has continued to climb during the past year to its highest level in more than 7 years. And we now see international banks appropriately shunning Russian oil, even without energy sanctions. Could you describe the range of different scenarios the Fed projections paint in regard to this? And along with that, how do you see this potentially impacting the already rampant inflation issues?
Well, obviously the price of oil depends on events that haven't occurred yet. It really depends on where this goes going forward. We have seen prices move up, including just in the last couple of days, and they moved up quite substantially since, if you go back 3 months before this incident kind of began, prices are up quite a bit. The effects are going to be passed through into gas prices, into lower economic activity, and into inflation, headline inflation. And the larger the increase, the larger the effect. But the question then will become, that's a price level change. Is that going to lead to repeated inflation increases at that time? And that is not necessarily the case. And of course, we would use our tools to make sure that it's not the case.
And of course, representing the constituency I do, which is both oil and gas and production agriculture, we take very careful note of what those actions will affect, how they will affect world crude oil prices. And of course, the Ukraine being a very historic major grain producer, my wheat people also are prepared to step up and match that. But it all underscores, I suppose, the increase in energy production in the United States and supporting policies that will not penalize or drive capital away from domestic oil and gas production. That's more of an editorial on my part, Mr. Chairman, but I note that we stand ready in this country to replace resources that may not be available or affordable for the rest of the world, and we just need a little incentive and encouragement from this side of the room to utilize those things. So my last question in the time I have remaining, the economy is currently operating in what I think we'd all describe as, at the very least, massive economic uncertainty. And when you deal with this 40-year inflation and the supply chain issues and the COVID-related issues, hopefully as we're in that final stage, can you elaborate on how critical it is for the health of the economic system to be reliable and to maintain liquid markets so we can navigate through all of whatever lies ahead of us?
Yes, so I would say our markets have been functioning well. There's a great deal of liquidity out there. We have now, between our swap lines and our repo facility for other foreign central banks and our standing repo facility in the Treasury market, we have institutionalized liquidity provision. And I think just the knowledge that that is there will help support good market function, which, despite all this volatility, we still have.
Thank you, Mr. Chairman. I yield back, Madam Chair.